Welcome back, everyone. Next up, we have Remark Holdings, Inc. It trades on the NASDAQ under the symbol MARK and delivers an integrated suite of AI solutions that enable businesses and organizations to solve problems, reduce risk, and deliver positive outcomes. Please welcome its chairman and CEO, Kai-Shing and Senior VP, Brian Harvey. And remember, you can submit all your questions for Remark Holdings, Inc. right here through the webinar module. Welcome, gentlemen.
Good afternoon.
Thank you.
All right, we're thrilled to hear your presentation. The floor is yours.
Okay, great. I want to actually jump to slide 5. So, as just stated, we're Remark Holdings. We're one of the few, if not the only, pure play focusing on artificial intelligence. We've been building this business for the last 6 to 7 years, and we've taken a platform which we've built from the ground up. Took us the first 5 years to build the technology. And then over the last 2 to 3 years, we've been able to commercialize it. So we're very excited to, introduce our company to you and show what we've built and what we think that we can take our technology platform and be able to bring it globally. Here's some background information regarding us. Okay. Go through this. So really, when we started our AI platform, one of the things that we realized is that, especially now with the post-COVID era, is that companies need to, how do you grow your revenue while cutting your losses? In terms of how do you do that by being much more efficient in how you're in your operations? In our view, certainly the only way to do that is through the use of artificial intelligence. And it's not just providing a point solution, as customers right now don't want to handle 16 different vendors. What they want to be able to do is to talk to one group that has a platform that's set for their particular industry and be able to provide those solutions for that. As I mentioned before, it's taken us 5 years, the first 5 years to get to this point. And as we all know, having good technology is one thing, but it's all about the commercialization. Our first major customer that we were able to sign about 1.5 years ago was with China Mobile. China Mobile, as a sense of scale, is 3 times the size of AT&T and Verizon combined. It took us about 1 year of just testing with them to be able to win the deal. And we were able to secure the master contract to change their 18,000 retail stores into smart AI stores. So as you can see from the slide, as in we all know, the challenge between offline retailers versus online retailers. And in a digital company, you are able to get the real-time analytics to help you make the particular changes to make your site better for the customers. Offline retailers never had this, but through the use of AI, now you're able to provide the real-time analytics for them. So setting up the cameras using our AI software, able to really teach and tell China Mobile exactly who their customer is and what their shopping behavior is. That happens as soon as they enter the store, their entire experience within the store. And now it allows the managers to understand what their customers are actually looking for. And now, in addition to that, and this only dealt with the first phase of our deal with China Mobile, we're able to expand into other areas in dealing with retail stores. That can be relating to security, where we're able to cut the security team down by 30%. So all the different solutions that we provide really help the retail store to operate efficiently, and they really need to just turn to one group rather than handle the different vendors. So taking that same concept, we were able to apply to the retail operations of China Mobile. We won our next big deal, which is with Bank of China. And Bank of China is one of the largest banks in China with over 20,000 retail stores. And as you can see from the slide, the typical issues plague them like any type of retail situation. There's in the banking retail office, there's a lot of space, but it's not efficiently used. So we needed to use our AI to help them better plan what actually goes into the space. Second, the shotgun approach of marketing never works. And so we're trying to give them the particular insights to curate the marketing to the individual customers. The third was, the actual interaction between the customer and the bank. A lot of the times customers go in with the view of just doing one particular transaction and then they leave. So our AI helps them understand what else the customer wants and helps them upsell the products to them. And finally, as I mentioned before, with all retailers, now we are actually able to give them a data-driven approach rather than something that's based off of gut. And all things help to actual sales conversion. And if you're able to convert more, you're able to spend more on marketing and just makes all your decisions done in a much more educated way. So this is really what we did for Bank of China. We provided these solutions to them in the platform matter. We provide them with precision marketing. We would make sure that we're monitoring the engagement of each customer. We would understand what the feedback is. This way we can make the particular changes to make that experience better. And all in all, we're creating an ecosystem for banking retail companies. Or retail branches. So we start off with Bank of China, which we believe is the thought leader in that particular industry. And we certainly see a lot more growth, not within its own 20,000 retail stores, but certainly all the other banks within China. And we're confident that as we do that, we can also go after opportunities globally. This is just to give you an idea of the total addressable market within the banking branches. It is the number seems very large at 22 billion over an 11-year period, but there happen to be a lot of stores within China. You have over 200,000 bank branches in China. And at $100,000 per store, that's how you hit the number. So really, when you're breaking it down, it's not a very large number. But like most opportunities in China, you are going after the volume game. And so we feel that we're very well positioned to do so. A third area that we've been able to move our AI platform into is into the smart communities. The issues with smart communities in China is that same thing, and you'll hear this is kind of a common denominator. There's a lot of human error. There's high labor costs, and which leads to a lot of potential issues of accidents, inefficiencies, and poor safety. So we were actually approached by some of the largest smart community developers to provide the solution on how do we solve this. So we would provide them with, a platform again on providing them the facial recognition, allowing them to register who they are when they come in and out in terms of guests. We're able to help them control the different community facilities. And we're really creating something where your daily life is integrated with, what they call the IoT of a smart community. So we've been doing this for about a year and a half, and I think the results have been very strong. Again, the human errors that kind of go along with safety have been significantly reduced. It is now very convenient, and it's not very dependent on other humans helping us to save time and energy. Everything's being curated for the individual resident that's living within the community, and it's efficient. So like the bank vertical, banking vertical. We see this as a vertical that we've been able to step in, and we see this as a massive opportunity over the next 3 years. This is a slide that addresses that market as well, the TAM. But again, 70 billion over a 5-year period sounds like a big number, but when you begin to break that down, you realize it's actually not. It's a big number because there are that many smart communities in China alone. Annually, it's a $14 billion upgrade opportunity. There are over 160,000 number of plus of smart communities within all of China. And it roughly works out to be approximately $87,000 per community. So right now, it's really just we've been able to establish a foothold with some of the biggest names in smart community, and it's just a process of us of going out and securing more contracts and implementing. One of the areas that I think that we've probably read in the papers right now is the importance of ESG, and that's an area that we're very much focusing our efforts on. One of the areas where our customer base is dealing with school systems and campuses, and we've been able to establish a foothold here where we're addressing over 600,000 families and being able to help their school systems reduce power consumption, reduce CO2 consumption for the future. One of the initiatives from the government is lowering the CO2 emissions, over the next 20 and 30 years. So it's a great opportunity for us because in the past people have talked about it, but the government has never enforced it. And now with the government really enforcing it, we see this as a great opportunity for us. Moving to the U.S., most of the opportunities that we talked about have primarily started off in China, and we think it's going to be a great opportunity. One of the silver linings with COVID as it relates to our AI platform is that it really opened up the prospects and bring our technology that we've been successful in implementing in China and bringing it in here to the U.S. And as you may know, we're one of the founders of ShareCare, and we have a very strong relationship with them. And as they are building out their business in making schools, hotels, stadiums, ShareCare verified, and making sure that they obtain the proper protocols, being ShareCare verified, that presents a great opportunity for us because we think we'll be part of that toolbox in terms of thermal imaging and making sure that the employees and the back of house people that come through are taking the proper steps, and we're able to verify that. And this obviously creates a much better experience for their own coworkers, but also gives the safety and the comfort for the customers when they're coming in, knowing that the people that they're working with have already been verified and gone through the proper measures of being health certified. And then lastly, I wanted to highlight a new business that we've been able to target is taking our strong AI capability of analyzing data. There's always a lot of data in the world, but the key thing is building the right algorithm to understand exactly what data you should be analyzing, what data sets you should be taking out. And then obviously coming with proper conclusions to that, or proper actions to that. We announced a deal in February with SuperDraft, which is a daily fantasy sports business backed by Caesars Entertainment. See, this is a great opportunity, not just to enter into the daily fantasy sports / sports betting industry, but really any business that is looking for how to acquire customers in a much more efficient manner, right? So that's moving towards, say, for example, the mortgage business. That's moving into the live streaming business, where people are looking to, how do I increase my conversion? Therefore, I can also lower my overall customer acquisition costs. In this particular case with SuperDraft, what was the opportunity? They had no brand. They weren't able to effectively target who their potential customers were. So the conversion rates were very low, and they were spending a lot of money. And not a lot of companies are as well financed as some of the bigger online sports companies, so they didn't have the luxury to learn as they go. We built a data set with them on figuring out who's the right target audience, and we were able to use our AI algorithm to continue to help them fine-tune where the marketing efforts should target. And while we just started with them, we feel that this is going to be, the initial success has been very strong, and we certainly think this is going to be a great opportunity with us, certainly as the football season continues through, as each group becomes better at what they do. This is just to give you an example of who our customers are. I think a number of these names are quite recognizable. And again, one of the common denominators I think that you'll find is most of them are the leaders in their particular industry, in what they do, as well as the innovation. You certainly see that with China Mobile, with what they do in the telecom and retail space. You see that with Bank of China and what they do with banking. CP Group is one of the largest conglomerates in the world, with a focus on agriculture. So we see something very similar with that. Turning to the U.S. On what we do with the Raiders, on what we do with a company called Stizzy, which is one of the largest CBD companies in California. So we've been able to establish our presence usually with the number one or two company in their particular industry. Once we're able to secure the contract, gain the confidence, we think it's a great opportunity for us to expand through the rest. The next couple of slides really talk about our technical ability. I think we've proven that the technical ability that we have really punches above our weight class. We are competing against the top companies in the world who have been much better financed with us, much stronger in terms of numbers of engineering team. Yet when it comes down to the actual competitions, we continuing to be first in the class. And the ICCV, which is the number one computer vision contest in the world globally, we've been able to consistently over the last couple of years, if not winning the particular category, but certainly placing in the top three. And then the ones that would have placed in front of us don't have a commercial application available. So we're pretty excited on what we've been able to accomplish from a technical side, but now we've been able to transform that into the commercial side, which is obviously the most important. I tried to focus this conversation primarily on what we're doing with with our current business. And we certainly feel that we're in the first inning in terms of what we're doing on the growth. We believe that every large trend takes about 10 years for really it to, capture its full stride. You've seen that with the internet itself. You've seen that with the mobile industry. You've seen that with cloud industry, even with crypto, and it's taken about 10 years. We are in our seventh year right now, sixth or seventh year of developing this AI industry. And first was to build the technology. Number two, being able to commercialize it for everyday use. The third part is to now acquire the customers, which we are doing. So we're very excited on seeing what we're doing, over the next 3 to 5 years. Up until this point, we have bootstrapped this company and got to where we are with very little capital. With the monetization of our ShareCare asset, we finally have the we soon will have the liquidity and the cash to really grow our business, not just in China, not just in the U.S., but really around the world, because this is a need it's a global need. And we're seeing an unprecedented amount of demand for our platform, because very few companies out there have a tried and tested platform. No one wants to be the guinea pig. And we've been operating in China for the last couple of years. We've been testing it under real life conditions, and now we're able to bring that technology to the other parts of the world. So with the monetization of ShareCare, they announced de-SPACing about in early July. We will plan, as the proceeds become available to us, we'll continue to maintain our leadership, right? We'll continue to build our technical team to be able to expand, not just into other verticals, but to be able to expand to other parts of the world. We'll be able to grow our pipeline, because now we're able to go after larger contracts because we have the ability to fulfill them. And then finally, as we mentioned on our last earnings call, in the fourth quarter of this year, we will be launching our NFT platform. And that will be using our AI platform and really enhancing that. And so we are excited to provide more details as we get closer to our launch date. So I'll stop right there, and thank you for your time.
And if there's any questions, we'll take them now.
Fantastic. Yes, there are a few questions, and we got some time left. We have Gary Zwetchenbaum, the CEO from Plumtree Consulting. He wants to know, please discuss your investment in ShareCare, 9.5 million shares at 75 million value. Your cost $1 million, and discuss how it relates to your market cap. Please talk a little bit about that.
Yeah, thank you. Our stake in ShareCare has never been revalued. It's been carried at our cost since we were one of the 5 founders of ShareCare back in 2010. I think, as you can point out from your question, a large part of our market cap is represented by our stake in ShareCare. So it's certainly it's disappointing yet exciting to see that there's as far as I'm concerned, a large growth in terms of valuation that we can get in terms of recognition for our AI business. But certainly, like any SPAC deal or any IPO, there's a certain lockup period. As that becomes to expire, we'll have more funds and available to us, and we'll be able to grow our business in an even faster way.
Anthony Fitzgerald wants to know if Mark is Mark involved in store floor planning to optimize product placement and display location, et cetera.
We're not at that point yet. We're not. We certainly never go in and say we're the experts in any particular industry. We're generalists, and we provide the tools for them. So we certainly can share some of the experiences that we do with other retailers, but we really are just providing the tools for them and saying, look, if this is a particular way you want to lay, plan where your floor is, let's try it. And we can, the beauty about AI is that it's 24/7. It's 24/7 A/B testing, 365 days a year. They're not taking a break. They're not taking a vacation. So any of the potential theories or ideas in terms of trying new ideas or making sure that old ones are the ones that you want to keep, we're able to test and make sure that it's a proper data-driven approach.
Another question from Gary at Plumtree Consulting. He says there seems to be a big disparity in valuations for public and private AI companies. Do you have any thoughts as to why?
I think in general, private investors are, have a longer duration and a longer time horizon on how they view their investments. I think in general, public investors still try to track things quarter over quarter. Frankly, for a newer technology or a new wave, it's very hard to plan it that way. So, which is probably why the majority of AI companies are private. I think you look at a company called SenseTime, which arguably is the most highly valued AI company in the world. They did 500 million of revenue last year, but lost 2 billion. That's 2 billion is a big number, and they're going at such a large valuation. And we're seeing companies that have similar revenue growth as we do, same numbers, but are losing, multiples of what we're losing annually, and they are at trading at an excess of 5 billion. So either they're really overvalued or we're really undervalued. So maybe it's somewhere in the middle, but we certainly think there's a huge discrepancy. And I think a big part of that is just the duration and the understanding of what AI really is.
Heath M wants to know, what do you think about going after China businesses versus U.S. business, given the ongoing tensions between the two countries?
I think in general with right now, we think China's a great time to go and operate because the adoption of AI is there. And in the U.S., while we all talk about AI, the actual budgeting and true adoption is probably a year away. So I think what's important is that we establish our foothold in China, show that we are able to win the right customers, show we're able to provide the right applications, and from that point, take that technology and bring it to our U.S. customers or U.S. European customers, and showing them like, hey, this is a tried and tested platform. And we think that's a very compelling offer. And actually, we know it's a compelling offer because just say over the last 3 to 5 months, a lot of groups come back to us or approach us because they know the products that we have been done in a real life environment rather than something done in a laboratory setting.
GB Shi says, your deal with Bank of China, is there future business with them to increase the revenue from that client?
Well, we absolutely think so. With these large companies, that's the beauty. That's why you take the risk of working in China, is because these companies are so large and there's so many different areas you can work within the company. The sales cycle is long, but we feel that the payoff more than makes up for it because you have the opportunity to work within all different areas within Bank of China. So take, for example, with China Mobile, it took us a year to win the contract. We first started out with their retail stores. Then we were able to expand into their smart community business. And there are other businesses that we want to be able to enter. So same thing with Bank of China and other similar sized companies.
Charlie Combs wants to know if you have any plans for a buyback.
We do. We certainly feel that our company is extremely undervalued. Clearly, the right financial and monetization of our, to do that needs to be done. But we want to wait for the right deal first. First, that's not, I would say, the first priority for us is making sure we continue to grow our business. And then, and behind that is certainly as we begin to receive our proceeds from ShareCare, deal with the right proper financing agreements, we'll certainly look to buy back our shares. But there's no question about that.
Corey Olson asks, you recently completed a 5 million PIPE transaction with a single institutional investor. Explain what the proceeds will be used for, why you did this rather than monetize your stake in ShareCare. If so, how and when?
Yeah. So like I mentioned before with, as in any IPO or SPAC situation, there's a lockup period. So we weren't able to immediately sell our shares. But more importantly, as I mentioned in our last earnings call, is that our business is very strong right now in China and the U.S. and you need cash to obviously be able to fulfill that. The worst thing is going into a meeting and you win the contract, but they want to be able to see that you have the cash to take either fulfill what they provided you, or do you have the cash to fulfill a much larger contract if they want to give that to you. So it's very important. I think in any business, I think anyone knows is that you have the ability to fulfill orders. Doing this deal with this particular group gives us that flexibility. So I think that's number one. Number two is this particular investor group has a very strong following. It is an institutional investor, a large fund managing multi-billions of dollars. And we saw it's a great first step for us to bring on very well-regarded funds that have a following. We certainly believe we deserve an institutional following given how we've built the business and certainly the blue chip clients that we have. And I think this is our first step to getting there.
Gentlemen, we do have more questions for you, but we are out of time, so we'll send them to you so you can answer directly. And we certainly hope you come back and present with us again. Fantastic presentation. Thank you so much.
Thank you.
All right, everyone, please stay with us as we transition to the next presenter. We're coming right back.